Welcome to Markets Now. I'm Michelle Rook along with Garrett Toay of AgTraderTalk, and a mixed trade in both grain and livestock futures today. And I got to start off with corn and soybeans because we kind of have this tug of war going on between old and new crop. And of course, the bull spreads have been really working there, and pretty tight supplies yet of old crop kind of driving this, isn't it?
Absolutely. Western Corn Belt values, Kansas, South Dakota, excuse me, Nebraska, where farmers are in the field here a little bit. You're starting to see bases start to creep up, and that's leading the spreads. It's in the West. You're going heavy in Central Illinois as far as field work is concerned. So I think, as I mentioned, end users looking where their coverage is going to come from for the next 30 to 45 days on the farmers in the field, and then where they can get coverage here. But I think the big thing is new crop corn is still in a 550, 575 type range. You look at this chart, we're consolidating in these levels. I think the market's comfortable here with that kind of price, considering it's still April 12th. Market's assuming 90 to 91 million acres potentially. We're definitely not trading that 92 that the USDA printed at the end of March. But I think the market's comfortable. I don't think they're watching, but I don't think they're necessarily too concerned about the melt in North Dakota because that's obviously a focus. I saw Chamberlain was 90 degrees this week yesterday.
Yeah.
They don't have the snowfall that they have in North Dakota, but man, that's awfully early to have that kind of temperature. That's kind of alleviated some of the market's concerns about this northern or the Red River Valley melt.
Absolutely. I guess I'm wondering here, we can't get the May corn contract above the 100 and 200-day moving averages here, so we run up into chart resistance. Do we get that through that eventually, and does old crop kind of start to pull new crop along, or do we just continue to work these spreads?
Well, if the stocks report was to believe, I mean, I think the flat price is going to have to do something. I
Okay.
mean, the stocks report showed that the farmer still held, if we were to believe the stocks report, the farmer held more corn because their cash flux, they didn't need to sell anything. So the commercial necessarily isn't sitting here flush with corn to fill this pipeline as it starts getting tighter and tighter. So the spread should firm, and eventually it's going to. I think it is going to get to the point where flat price is going to have to. It may not be long lasting, go up, hit some target offers, that sort of thing. But the market's going to have to do something to get the farmer's attention away from field work to get some grain movement here short term.
Right. And soybeans, well, may back above the $15 mark here, but do we have any bushels out there we can pry from farmers' hands even at these prices?
A similar situation in the soybean market as far as stocks are concerned. Farmers still holding a little bit more than expected because of they don't need cash. But I called it the great dance today with the $15 level. We weren't right up there in the 745 break. Actually sold off early in the session and then traded the 1510. Bull spreads, we had the July Nova bean spread go back and retest its contract highs here at 170 today. That's a good sign. It had a big bullish engulfing candle on that. So I think we're close to potentially seeing some movement one way or another. And if you're watching these spreads, it suggests to the upside.
Of course, we didn't get any friendly news out of the report domestically yesterday for wheat with the bigger ending stocks, but today were we trading weather? Was the fact the dollar was a little lower helping out or not?
With Chicago wheat leading, I think we're back to the Russian jawboning of the grain export corridor. Because in reality, the most bullish aspect of this entire wheat complex is the drought in the Southern Plains and the hard red wheat crop, obviously. And Kansas City closed 3 to 4 lower.
Yeah.
We've traded the KC Chicago spread to new highs. I think you saw a little bit of correction in those spreads, but in reality, it's Russia continuing to threaten to pull out of this grain export deal. That may be spooking some of the soft red wheat shorts out of Chicago, and that's really it. You look at weekly conditions, the Eastern Corn Belt soft red wheat crop looks pretty phenomenal. Or has maybe getting the cart ahead of others has great potential, and we have some opportunities there. But I think it's just a headline driven trade today.
Cattle market, let's talk about that one. New contract highs in both live and feeder cattle futures again here today. What's your projection? How much higher do you think that market is going to go here? Because we're under the cash market right now.
Right. If the early cash indications this week, I mean, we're $7, below the cash market. So, since the third week in March, fats have nearly gone parabolic. Just catching up to cash. At some point, the bullet's going to hit the bone. But you look at boxed beef values here, the consumer's paying it. So. I saw somebody comment as though, I mean, everyone as a cattle feeder myself, our biggest concern is a recession. At what point does that pricing point break the consumer? And if box beef values are at these current levels, the question from a customer today is like, will we ever see a recession, or is this stagflation and this is just the way it's going to be? That's an excellent question. I don't know at this point if people are going to pay it. you know, God bless them. We'll take it.
Yeah.
And cash has to work higher.
Well, and we've seen such high prices for just about everything. And so does beef even look that expensive right now if you're a consumer? So got to wonder.
That's a good question.
Let's talk about the hog market, because the other thing that's been happening, we've been seeing these cattle hog spreads. So hogs have been on the short side, cattle on the long side, and we kind of saw a little more evidence of that again today, didn't we?
Yeah, cattle have a story, hogs don't. And a big outside day higher today, or excuse me, an outside day lower in April hogs, and we're going back and retesting those lows. It's been a steady grind lower since the middle of March, and that's exactly when the cattle market started to take off as well. So I think there's a lot of spread trade. So ultimately, unfortunately, the most bullish thing for the hog market is when this cattle market rolls over, if and when that happens, because it's a function of order flow and market structure.
Yeah, and we've got to get the cash market to bottom too, though, don't we, Garrett?
Absolutely, and that's the crazy thing is with beef so expensive. We should be finding demand for hogs here at some point where the consumer flips over. We're getting into summer grilling season. I think that at some point people are going to make that switch, but they haven't so far.
That's a really good point you make. Thanks so much for joining us, Garrett Toy with AgTraderTalk. That is Markets Now.